Welcome to Explain the Charts, where today we are conducting an in-depth analysis of Alphabet Incorporated, the parent company of Google, under ticker Google. The current date is April 13, 2026, and the stock is making headlines as it solidifies its position in the exclusive $3 trillion market cap club. Recent news indicates that the surge in share price has been heavily driven by the release of the Gemini 3 AI model, which analysts claim outperforms the latest offerings from competitors like OpenAI. Furthermore, Google's shift toward using its own custom AI chips has put immense pressure on traditional semiconductor giants, while Meta Platforms is reportedly renting Google's Tensor processing units. Despite some lingering concerns regarding the DOJ's focus on the Chrome browser, the market has largely shrugged off regulatory fears in favor of AI-driven growth. Looking at the daily chart, we can see a spectacular uptrend that began back in late 2024 when the stock was trading near the $168 mark. This long-term bullish trajectory has been punctuated by massive gaps up, most notably in September 2025, where the stock jumped from $211 to over $230 in a single session. The volume during these breakouts has been substantial, indicating strong institutional conviction behind the move. As we approach the current price of approximately $317, the chart exhibits a high degree of strength, but is also entering a zone of historical volatility. We need to determine if this level acts as a launchpad for the $350 target or if a healthy retracement is overdue. Zooming in on the daily action from late 2025 through early 2026, the trend remains incredibly consistent. Note the support level that formed around $274 in late March 2026. This acted as a major pivot point for the current leg up. On March 31, 2026, we saw a significant 3.42% gain that essentially signaled the end of a brief consolidation period. The stock then gapped up again on April 8, 2026, showing that buyers are willing to chase the price even at these record highs. However, notice the high wick candles near the $322 level, suggesting that some profit-taking is occurring at local peaks. This correlation between the positive Gemini 3 news and the immediate price appreciation is undeniable in the data. The daily VWP has been trending steadily upward, which is a classic sign of a healthy bull market where value is being added consistently. We should also pay attention to the transaction counts, which hit over 1.9 million during the February 2026 peak, showing massive interest. If we fail to break the recent high of $328, we might see a double top formation, which would be a bearish reversal signal. But as long as we hold above $300 on a daily closing basis, the long-term outlook remains decidedly bullish. Switching over to the 1-hour chart, we can analyze the microtrends that developed over the last few weeks of trading. In late March, there was a clear descending channel that saw the stock dip to $290 before a massive wave of buying entered. On March 24th, the hourly data showed a series of red candles as the market tested the $290 support floor. Once that floor held, a V-shaped recovery ensued, leading to the rapid climb back above $310. This recovery was characterized by increasing hourly volume, confirming that the dip was being aggressively bought by traders. Key resistance levels were breached at $302 and $308, which have now flipped into potential support levels. On the hourly time frame, the 315 to 318 range has become a high-volume node where the stock is currently consolidating. Short-term traders should look for a breakout above the $321 resistance seen on April 10th to confirm the next move higher. Conversely, a break below $312 on the hourly chart could indicate a slide back toward the $300 psychological level. The hourly RSI is likely hovering near overbought territory, so some sideways movement here would be healthy for the overall trend. Now, let's take a very close look at the 15-minute data from April 8th to April 10th to understand the immediate intraday dynamics. On April 8th, we saw a volatile spike up to $322.08, followed by an immediate retracement, highlighting resistance at that peak. Throughout the remainder of that week, the stock settled into a tighter range between $315 and $319. The 15-minute candles on April 10th show several attempts to break above $320, but each was met with selling pressure. This churn at the top of the range indicates a battle between bulls and bears as the market digests the recent news cycle. Watch the VWP on this time frame. When the price stays above it, the intraday bias is bullish, favoring long positions. A successful trade setup would be a 15-minute close above $321 with a volume spike to confirm the breakout. If the price breaks $315 on this time frame, we could see a quick stop run down to $311. These smaller time frames are essential for timing entries, especially when the stock is at all-time highs and levels are less defined. Always look for candlestick clusters to identify where the most trading activity is concentrated intraday. Returning to the daily view to recap, the most critical price level to watch is the $328 resistance. A break above $328 would likely trigger a run toward $350, which I estimate has a 65% probability of happening this quarter. Conditions that would reinforce this bullishness include continued strong AI adoption and further positive earnings reports. On the downside, if the stock falls below $295, a deeper correction toward $275 becomes very likely. I give a bearish reversal a lower probability of 35%, given the current strength of the tech sector and Alphabet's revenue growth. Long-term investors should remain bullish as long as the $270 macro support level remains intact. Short-term traders should focus on the $312 to $322 range for breakout and breakdown opportunities. Watch out for upcoming economic data and Fed commentary, as interest rate expectations still heavily influence high-growth tech stocks. Thank you for watching this analysis of Google on Explain the Charts. We hope this helps you navigate these record-breaking markets. Finally, please remember that this is not financial advice. Always do your own research and consult a professional before making investment decisions.